Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And today is an interesting topic. We're going to be talking about building a non-discretionary trade system using something known as the Gator Oscillator. We're going to be sinking our teeth into something new, if you'll forgive the horrible pun, but we're going to be planning and placing a trade with entries and exit signals that are generated in sort of black and white fashion. No discretion involved in the application of a system like this. Should be a great discussion. Before we get to any of that, though, let me first of all say hello to everybody in the chat again. Great to see so many familiar names as always. Hello there, Janelle and Scott, Ricebird, Lola, Kevin, Mary, Lakshmi, and on the list goes. Thanks for joining us week after week. We always appreciate your attendance and your contributions to these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream is concluded, well, enjoy that recording, but be aware that you're invited to join us in the live discussion. If you'd like to be here, this is a Friday webcast series. We kick things off promptly 1 Eastern time every Friday. I also want to let everybody know that my very good friend Scott Thompson is hanging out in the chat. Scott and I have been working together for a long time, years and years and years. Scott brings a ton of experience to this discussion. I definitely appreciate having his assistance here. Thanks for helping me out there, Scott. Scott's just going to be addressing any questions that I can't get to during the natural flow of the presentation there among our chatting attendees. I would also like to issue an invitation to everybody watching. If you have an account on X, you should be following your favorite presenters there on X. My handle there on X is at Cameron May CS, and if you reply to one of my posts there, I try to reply right back to you. It allows for interaction. It's not otherwise available when the camera's not on. It's the best place to connect with your favorite presenters in between the live streams. But let's get into this discussion of building a non-discretionary trade system using this thing known as the Gator Oscillator. Sounds interesting? Before we do that, though, of course, we first need to consider the risks associated with trading and investing. Risk is real, so bear these important disclosures in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including loss of principal. All right, so let me set an agenda for you so you'll know how we're going to proceed through this discussion. This webcast is a part of an ongoing series of webcasts that are tied from one to the next. So we do have some example trades from previous webcasts that we need to follow up on. There's actually been a lot of action in that account while the camera's been off. So we'll take a look at our one single remaining current position, see what happened to the other three, and then we're going to be planning and placing a new trade using the Gator Oscillator. But obviously, as we move to that phase of the discussion, we need to talk about what exactly is the Gator Oscillator? How's it constructed? How might it generate trade signals? And then build an example trade system for using that indicator. So let's go right to the Thinkorswim trading software platform. This is a desktop platform. And all we have left in our advanced charting portfolio is our BA position. All right. So here's the logic of that trade. So we took that trade on the Chandi Momentum Oscillator, which had dipped down in the oversold territory, started to strengthen up out of that. And so we took an entry on the hope that as that rose toward the zero line, we could take a profit there. Well, it's been rising, but the stock has not been cooperating. It's one of the things about any sort of a technical approach. Nothing guarantees performance from one trade to the next. In this case, we've been floating downward, but still holding in there just below the stop that we have below these recent lows. So we're going to let that continue to work. We teased with a crossover, never quite crossed over that zero line. So we're still in there. We'll let that one continue to work. But let's look at our other three positions, one of which, as I was preparing for this webcast, I heard that little familiar trade bell for an order that's filling, ding. I thought, uh-oh. I know exactly what just happened there. Not necessarily, uh-oh, this was actually a profitable outcome. But our SMCI market forecast trade has concluded. So let's go to SMCI. And I'm going to load up that study set. Here's our SMCI market forecast trade. And let me just hit the brakes on this, on the presentation for just a moment, because some of you are going to be watching this just sort of out of the blue. This might be your first advanced charting techniques video that you've seen. And so you're wondering, what in the world is a Chandi momentum oscillator, and what the heck is the market forecast indicator? How do I learn about these things? Because I wasn't here to see these trades being built in the first place. Well, do yourself a favor and make sure that you have subscribed to our Trader Talks channel on YouTube. That's where we house our previous webcasts. You can also join the live streams there, but just go down, click on the subscription button or the subscribe button. It doesn't cost anything. It literally only takes a second. But then find Trader Talks Schwab Coaching Webcasts on YouTube. And if you go to the playlists, this is where we archive all of our previous webcasts, with a few exceptions. And if we scroll down sort of toward the middle, we'll find the archives for this series, Advanced Charting Techniques. I can click on View Full Playlist, and then you just look down through this for those key words. It'll tell us, like, for example, we had a trade that just concluded. That's a spoiler, but using Heikin Ashi candles didn't go so well. We talked about the stochastic distance oscillator. There is the Chandi momentum oscillator discussion, and so on. So if you're intrigued by one of these, you can just go back and watch it. So let's go back to our platform. On this position, we took a position in SMCI as it was coming down to an apparent previous price floor. We also noted that all three of the oscillators comprising the market forecast indicator fell down into the oversold area at the same time, creating what's known as a bullish cluster. And for some traders, they see that as an entry opportunity. However, sometimes bullish clusters happen a little bit early. As you can see on the last few, here are the previous clusters that we've seen on SMCI this year. And price did go down some distance before starting to climb. So we allowed for that, put our stop down below those lows, and it actually came right down and just touched on those lows and started to rise. Now, as it rose, we've been sort of leveling up our stop order. And most recently, we moved our stop up to right about here, just below this previous high. And look what's happened. We've broken down below that, and today we reached down, we touched that stop. That trade has been concluded profitably. Got in here, got out just today. That stop was just triggered. Janelle says, a bullish cluster. You have not heard that before? Yeah, Janelle, you might want to go check that one out. You can't really go do like a YouTube search for videos on the Thinkorswim market forecast tool, because it only exists here on Thinkorswim. It's a proprietary tool, so the only place to learn about it is from the Schwab Education Coaches. So you may want to check out that webcast that I just showed. All right, so there's our SMCI trade. We've also had a couple of others. We had a position in BR, Broadridge Financial. SMCI, nice trade, worked out very well, made a nice profit on that one. Not the case with Broadridge Financial Solutions. If we go up here to our studies, let's load up our study set. We used the stochastic distance oscillator a couple of weeks ago to initiate a trade here. That was right there on the 3rd. Again, sitting at an apparent price floor, we saw a rising triangular moving average, potentially confirming a bullish trend, even though we've been coming down for a while. And then we saw our oscillator starting to rise from reaching what might be considered an extreme low. So took an entry here with the hope that we were going to rise back up to previous highs. Sometimes best laid plans don't work out. And in this case, our stock has broken down like lots of others. Yeah, we've had a lot of volatility in the marketplace recently. And I think that a lot of traders can relate to this. When markets get choppy, if a trader uses relatively tight stops, which we tend to do in this webcast series, it will tend to lead to a quick series of quick exits. Kind of the way it works. In any case, yep, we just got stopped out. Ooh, this will be interesting. I don't know. I can't promise that I'm going to come back and look at this in a future webcast, because we're done with the trade. But it's always interesting to see on trades recently concluded, if we're stopped out, did the stock continue to fall? In which case, maybe the stop did us a favor, even in the case of taking a loss. Maybe it's preventing larger losses. Or there could be a lesson that stops might be a little bit tight if we keep getting triggered out and then seeing the stock rally from there. Looks like very early, very preliminary signs that that might be the case from here. We'll see. But that one's done. So we had one other, and that was our Heikin Ashi trade from last week. Let's bring that up. MRK was the symbol. Let's remove our stochastic distance oscillator and our moving average because they were not part of this trade. Instead, here we changed the style of our chart from a candle to Heikin Ashi candles. And what we're looking for here was a series of white candles followed by a pullback of red candles. And specifically, let me zoom in. We were looking for what's called a reversal candle with Heikin Ashis. It's a small-bodied candle with a long wick sticking out the top and the bottom, also traditionally known with traditional candles as a doji. And quite commonly, those can signal reversals of trends. So, for example, we might have been going up and we get a reversal, a couple of dojis here, or reversal candles, and it might send the stock in a new direction. So here we were kind of hoping that this was signaling a reversal of the upside. Just in case it didn't, we had a stop down below our Fibonacci, and that got triggered. So that's done. That's a finished trade. I wanted to go through, so the original plan was hopefully to see the stock rise above our 100% Fibonacci. If it did, the target exit would be looking for a reversal, in other words, another doji candle above that 100% retracement line. Didn't get there. That's the way it goes. It's been a great year for talking about technical analysis, generally productive, and a lot of that stems from just trading in the general direction of the markets. As long as that persists, a trader might employ any number of bullish strategies, and that can assist with the performance of those. When the markets get a little bit more choppy, some of those strategies might get a little bit shakier. And if the markets reverse and we insist on being bullish when the markets are coming down, even the best of bullish technical traders might struggle, right? But let's just go have a quick peek at the markets. Let's switch our style up here. Change our chart type back to candle. That's the update on our current positions. What's happening with the markets? Well, markets have continued heading higher. There was that big down day last Friday, so that was a week ago, and then we've gotten some pretty significant choppiness since then. I actually posted a question out on X asking people, do we think that we're going to get back up to these highs? I use the NASDAQ as a stand-in, but same might apply to the S&P. Do we think it's more likely we get back up to these highs in the near term, or do we think it's more likely we get back down to those lows? Let's just put today's position in a little additional context, though. We're going to come up here to our studies. Let's load up our trend value momentum strategy set. So this is a combination of three technical factors. First of all, a trend indicator. We have a value indicator and momentum indicator. So a trader using this approach, and this is what we use to get some context for the S&P every week. It doesn't mean that this is the prescribed way to do it or the way that every trader should look at the S&P. It's just an example technical lens, and we just keep it consistent from one week to the next. Because I kind of didn't want to shift our view technically on the index as well as our view technically on the individual trade strategies for the equities, because I think that'd be a lot of lift. I like to introduce some consistency from one week to the next. So this is what we do. In any case, what's going on with trend? Well, the 50-period triangular moving average is still above the 100-period triangular moving average. And as a little bonus here, price is above both. But looking through that technical lens, even with this recent choppiness, even with Friday's sell-off, this might be interpreted by a trader of this approach as still being bullish. So far, so good for the bulls. That's a check mark for the bulls. Also, our RSI, we did get, interestingly, a divergence on RSI that prefaced this sell-off. So maybe that was the outcome for that technical divergence. But our RSI dipped very close to being in the oversold, or in this case, the value territory. So trend, bullish. Value seems to have dipped low and starting to rise. That's also bullish. And then this is something that's just working itself out right now. If we look at our momentum oscillator, momentum seems to have swung to the sellers, indicated by bright red histogram bars on our MACD histogram. But when we see the bright, well, see, I told you it's just playing out literally moment by moment. Look at this. Let me zoom in on it so you can see it. See this last histogram bar? From one moment, it was there it went again, bright red. Then it switched to dark red and back and forth. I'm telling you, this is sort of a story that's playing out right in front of our eyes. But typically, for a momentum swing, the trader might be looking for our MACD to get down there, bright red, and then shift to dark red. They might prefer to wait till the close to get something potentially more definitive. But that's kind of possibly happening right now. We'll see. But so far, trend bullish, value bullish, momentum kind of bearish, but working on it. Yeah, I call it the red shift. That's right. It's my term. You won't see that used anywhere else, but I refer to it as red shift, going from shifting from bright red to dark red. We'll see where we wind up at the close. But overall, let's say that our trader is generally bullish. We're going to be placing another bullish trade today, and I typically just stick with that because I don't want to get out in the weeds of explaining what something like short selling is all about, which is a stock trading strategy that can carry unlimited risk if the stock goes the wrong direction. Lots to know about that. To just keep it clean, I typically take the bullish perspective to introduce a new indicator and then just say, yep, these could be reversed in most cases to trade bearishly. But let's learn about building this non-discretionary trade system using the Gator oscillator. So our example, we're going to learn about it. Let me bring up, let's see, what was the symbol I settled on? IBM, I think. Let's go look at what's going on with IBM. Let's go to IBM, clear up our study set. But the first thing that I need to tell you about the Gator oscillator, shall I say Gator oscillator indicator? I kind of get a nice little flow that way. But the Gator oscillator gives us no insight into trend. It can generate buy and sell signals, but it is not telling us whether they're bullish or bearish buy and sell signals. So the trader needs to take the first step before implementing a Gator oscillator trade. First step might be to identify trend, and then maybe to trade in the direction of that trend. That's on the premise that the trader subscribes to the concept of trading with the trend. But just know, Gator oscillator was not built to distinguish between bullish and bearish signals. It just generates signals. So what's going on with IBM? How might we identify trend? Well, some traders might just say, well, the highs or the lows are going higher, the highs are going higher. It's an upward trend. Maybe we're a little bit high on that. Maybe more recently, though, trend kind of strengthening. Or maybe they just use a technical indicator. And what I want to do today, let's make the focus on creating a non-discretionary trading system. That means I just use some discretion to determine the highs and lows and which trend time frame to emphasize. Let's remove that discretion, and instead, maybe a trader employs a more mechanical approach. And for today's mechanical trend approach, let's use maybe the most commonly used indicator, which is this going to be our simple moving average. So let's recruit a simple moving average because I don't want to spend too much time talking about trend identification. Instead, I want to talk about our Gator oscillator. So let's use a 100 period longer term identification of trend. And let's just say that our trader's rule is, as long as our 100 period moving average is climbing, their outlook on the stock that they're reviewing is generally bullish. And then they're just looking to refine the timing of entries and exits within that bullish trend. But this is where the decision is made. Now, the Wire Rabbit says maybe regression lines. Good question. Some people might not know what linear regression lines are. Here's what I might suggest for that. If you want to do this, you can just go to our to our YouTube channel. Let's go back to the YouTube channel. And instead of going through the playlists and trying to find linear regression, let's just type in, you use the keyword regression. So I'll just type in regression here. I want to show that you can search our channel archives and find topics of specific interest. And hey, what do you know? Who's this guy talking about combining 3 linear regression line tools into one trading strategy? If you don't know what linear regression is and how it might identify trend and entry and exit signals, you may want to check that out. Anyway, back to our chart. All right, so this is sort of the foundation for the application of the Gator oscillator, because this defines for the trader whether they're taking bullish or bearish trades. Now we're prepared to go do to get to learn about the Gator oscillator. So let me add that to our chart, and then I'll talk about how it's built, the 4 distinct phases of the Gator oscillator, and how those phases might generate entry and exit signals. So let's type in Gator. And what you'll notice here is there are 2 technical indicators that include the word Gator. We have the Williams alligator, which is not what we're discussing today, but the Gator oscillator. Let me click Add Selected. As I do, you'll notice that there are some key elements of the indicator that are shown right here. Yes, this is another Wells-Wilder indicator, but HL2, 13, 8, 5, and then minus 8, 5, and 3. So I'll explain what each of those are. It sounds like a lot. There's some indicators that's pretty complicated in their construction. They can include very complicated algorithms. This isn't one of those that I don't think. Let's just apply this to our chart. There it is. Let me just zoom in a little bit so we can see these a little bit better. And let's talk about how this is built. All right. So as you'll see, the Gator oscillator includes a 0 line, which really doesn't have a lot of significance typically. Instead, what the trader might be interested in are these histogram bars. Now, all those numbers, Janelle, in just a few minutes, those numbers will make sense, okay? As well as the HL2. But the histogram bars are what identify the phases of this indicator and what generate the buy and the sell signals. So what are these histogram bars? Well, the histogram bars are showing us the distance and the change in the distance between 3 moving averages, right? Now, we've applied a simple moving average to our chart, but we know there are other types of moving averages. There are simple, exponential, triangular, whole moving averages. We've talked about all of those in previous webcasts. One that I don't think that we've gotten into is a median moving average. Is anybody familiar with a median average? What does median usually mean? If you're talking about, if you want to know what the median income of an American is for the last 12 months, or if you want to know the median house price, it's the middle. Yeah. So a median moving average, instead of using the closing price from day to day, uses the middle price from day to day. In other words, it just looks at the high and the low for the day and divides that by, add them up, divide by 2 to find the median. So HL2 literally means high, low divided by 2. Yep, that's it. So is that a terribly complicated variation on the general moving average theme? Not really. So then we just look at the interplay of 3 different median moving averages. We look at a 13 period. Now, this is a daily chart. So when I say period, I mean days. I'm just going to say days from here on. But just know, if we were to switch to a different chart, like a weekly or an hourly, the period would change to a weekly period or an hourly period. But this one, in this case, is looking at a 13-day median moving average compared to an 8-day compared to a 5-day, right? And it's just looking at the interplay of those. So we have one that's a little bit longer, the 13. We have one that's sort of in the middle, the 8. And then we have the fastest moving average, which is the 5. And just like with a typical moving average, if your let's say your fastest moving average is rising above the slower ones, what might that mean about price? It might mean that price is moving up, And if it's moving up faster and faster, if that 5 is getting away from the 8 and the 13, and a typical interpretation there would be that the trend is strengthening. So our Gator oscillator here is really intended to identify whether trend in the quite short term is strengthening or weakening based on how these three moving averages are moving related to each other. So our histograms here are just showing the distance between our different moving averages. So the top histogram is showing the distance between the 13 and the 8. The bottom histogram is showing the distance between the 8 and the 5. So when we see a top histogram that's green, it literally means the 8-period moving average and the distance between the 8 and the 13 is widening. Now, I almost made a mistake there. Almost made a mistake and almost said that it means that the 8 is getting further above the 13. No, it doesn't. This is agnostic regarding bullish versus bearish. Instead, the indicator just looking at the distance between the two, right? But yeah, if we see a green histogram bar, it just literally translates to a widening distance between the 8 and the 13. And in a bullish trend, that typically means that the 8 is advancing faster above the 13, and the trend is strengthening. The lower histogram bar, if we see that green, it means that the distance between the 5 and the 8 is growing. Again, doesn't tell us direction. It just tells us whether we're widening or narrowing. That's why it's so important to determine trend first. That gives us insight into trend direction. This does not. But in any case, so if we see a combination of two greens, that means the 8 is getting further away from the 13, and the 5 is getting further away from the 8, and all three are sort of widening apart. Now, when we have a red histogram bar, that means that they are narrowing. 13 versus 8, 8 versus 5, things are getting tighter. All right. And then if we have a mix, obviously that's just a mix of the two. The 8 is getting wider, further away from the 13 in this case, while the 8 and the 5 are narrowing. Maybe that fastest moving average is starting to turn around and get closer to the middle one. So the trend is showing a little bit of shorter term weakness. But the general interpretation here, though, just to bottom line all of this, is we're looking at is the trend that we've already identified, is that strengthening or weakening? Right. Now, finally, we have these three numbers, -8, -5, -3. These are offsets. For some indicators, we know that indicators are used, they're constructed using historical data. And that can cause an indicator to lag. And to adjust for that lag, this indicator is actually shifted by -8, -5, and -3 days. So the way that we will see that is it sort of pushes the indicator forward to hopefully speed up the signals. What that will do, though, let me expand my chart here for just a moment. Let's add a few days. Let's go to the right expansion settings, click apply, click OK. You'll notice that our indicator is already giving signals out in the future when there's not even price activity there yet, obviously. These few bars we don't pay any attention to. All right, that's just sort of an artifact of the adjustment. So let's get rid of that right expansion and just look at a nice clean. There we go. All right, so here's what the trader is looking for. Let's talk about the 4 phases and why we call this the Gator oscillator, and then we're going to plan a place of trade using it. So phase number 1, just imagine our gator is an actual physical animal. Phase number 1, we have all red histogram bars, and you'll notice the longer they stay red, the more they tend to contract toward one another. This is sometimes referred to as the sleeping phase. And the gator is only really considered to be fully asleep if there's been at least two full red histogram bars, right? So what's actually happening here? It means all of our trend lines are starting to converge. There's kind of a narrowing, a constricting of price activity. The trend is sort of weakening. Then we start to get a mix. We go from sleeping to awakening. That's where we get maybe a green above and a red below, maybe a red above and a green below, but a mix of these histogram bars. That's known as awakening. And for some traders, that right there is an entry signal. The very first awakening bar that some traders might wait for two. Some traders actually employ what they might call a rule of two, meaning any individual combination of histograms here isn't important unto itself. Like this one individual red day. Is there an individual green day out here somewhere? Yeah, there's an individual green day. That wouldn't be considered to be significant. However, some traders a little more aggressive, looking for entries, will act on just that very first mixed histogram. So we go from sleeping to awakening. And that awakening is the buy signal. So I'm going to put an oval around this. This is the buy signal. This would be about right here on that day. And then we wait for a series of green bars. So commonly, you'll just see a series of mixed bars. Here's a red, but it's all by itself, not seen as technically significant. Here's another red, but it's all by itself, not seen as technically significant. Again, a singular isolated red. But then we get these red bars. Pardon me, these green bars. Let me draw in the line here. When we start to get greens, and I'm going to go right over this one that's a mixed, but it's all by itself, out to the end there. There we go. So this is sleeping. This is the awakening phase. And then we have what's known as the feeding or eating phase. What's really going on here? Well, our three trend lines went from narrowing to kind of shifting back and forth, and now they're widening again. That's what's happening. And that's seen as a strengthening of the trend. And the last thing the trader might want to do is to sell just as the trend is strengthening. So instead, what they'll do is wait for two mixed bars again. Right? So this, when we start getting mixed bars following an eating phase, what do we call it when we've been eating for a while? We say we're full. The creator of this histogram bar, Wells Wilder, actually called it sated. I don't know. I don't like the term sated. It's kind of an archaic term that I have to explain. It just means full, okay? But when the gator is full, that's time to exit. So in this case, that might have been right here. There's our exit signal. So that's it. So it's known as the gator. Yeah, stuffed, Janelle. That'll work. Works better for me than sated. In any case, it's known as the gator oscillator because if we use our hands, let's all pretend like we're sitting on our mats in our preschool and we're moving our hands as the histogram widens and narrows. Yeah, it creates this effect of looking like a gator chomping along the bottom of our chart. That's it. There's our gator oscillator. So we do need to learn how to recognize sleeping periods, which are at least two red histogram bars. Then our awakening period, which for some traders, it's the first mixed bar. For others, they do wait for the second. And then we move to a third phase when we start to get solid green. That's our eating or our feeding phase. And then finally, we hit the full, the sated, the stuffed right there. Jay Richardson says, this is so interesting. Well, very good, Jay Richardson. That tells me interesting is better than confusing. So thanks for that feedback. Art Vandalay says, do you have to wait to the close for the signal to complete? It's a good question. What Art Vandalay is talking about is the close of trading. And yeah, for some traders, they do prefer to wait for the close because These are quite short-term moving averages that are being used. A 5-period moving average can shift its direction without much trouble. Yeah. So, yes. Now, if you guys are saying this is interesting rather than confusing, when we're looking at this that with all of these colors and combinations, and I've managed to make some sense of it for you, then I've done my job, and I'm glad for the feedback. So let's go place a trade based on this approach. So again, total approach is, number one, make sure that however we identify trend, and we're just going to do it with an upward sloping 100-period simple moving average, but we need to confirm trend direction first. Then we look for an entry signal, which is at least 2 red bars, followed by at least 1, for some again, preferably 2, mixed bars. All right. Then we'll hold until we see greens followed by mixed. So red followed by mixed into greens followed by mixed. What stocks are doing that? Well, one thing that we could do is just go over here to our watch list. If we have a watch list of stocks we're following and just working our way down through. That's what I did before the webcast launched, and I didn't get very far, got 3 symbols in when I noted this. Let's see if Apple's still cooperating, and I can make a good point here. Ooh. So let me zoom in on Apple. What has Apple been doing? Oh, by the way, I kind of skipped ahead. First of all, what's the direction of our 100-period moving average? It's up. So during this phase, we're taking these signals as bullish. If this is moving down, exactly the same signals produce bearish entry and exit signals. All right. David says, are the histogram bars truly red and green? I see red and black. Do I need an eye exam? It's awful close, isn't it? As we zoom in, it becomes a little bit more obvious, but that to my eye is definitely green. It's a very dark green, but it's green. Yeah. So here we have Apple that has just gone through a sleeping phase, and we have one mixed day. I'm going to take that trade. Some traders said, Cameron, nope, I prefer to wait for number 2 or for day 2. That's okay. I'm going to take that as our entry. So let's do this. Let's throw a little oval around this. Let's throw an oval around this. So we knew those, those are entries. And as we zoom back out, let's save this as our study set. So this is going to be our Apple Gator. So later. It's going to be our study set for this trade. And if it's helpful sometimes, you can even leave notes to yourself. I'm just going to put it right down here on the oscillator. Sell on second mixed. I'm using sort of layman's terms here. I could say, sell after the feeding period or whatever, but I'm just going to make it more explicit. So when I bring this up again in a future webcast, it makes it a little bit easier to explain. People weren't here on day 1. Okay. Let's say we're going to sell on second mixed day after at least good grief. Can you tell that I can't type very well? I was in that generation that was just before everybody got a personal computer. Back in my day, when there were a few kids learning typing skills, you were preparing for like a clerical career. Anyway, there we go. All right, so let's place our trade. And really here it's just buying as many shares of Apple as we feel like are appropriate. So let's go to our trade tab. We typically invest about $5,000 in a trade. So 10 shares would be about $2,500. Let's just do 20. I'm going to click on the ask price. There is no limit order. There's no stop order here. This is a purely technical trade. generated entirely from the indicator. And we don't know when we're ever going to get our 2 grains, and we don't know after that how long they'll last or when the mixed are going to show up. But let's buy 20 shares at the market price. Obviously, when we're placing market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from quotes displayed at order entry. So we're guesstimating around $250.60-ish cents, but we'll see where we fill. And there's no commission on this trade, but there can be on some types of trades. Let's send that off. So that should fill just about immediately here. In any case, we've accomplished what I set out to do today. I wanted to introduce how a trader might build a non-discretionary trading system using the Gator oscillator. So we talked about how it's built, how to recognize entry and exit signals. We planned and placed an example trade. So time for me to let you go, but I have a few things for you to bear in mind so you'll know the full range of educational offerings that are available to you from Schwab. Number one is, if you haven't subscribed to our Trader Talks channel yet, do that now. Doesn't cost anything. Just click on the subscribe button, but this is where we house previous webcasts. It's where you can join the live streams. Also, you can do a keyword search through our video library and find topics of specific interest to you, as I demonstrated a little bit earlier. Another thing that I want to suggest is that you follow me on X. All right. My handle there on X is @CameronMayCS. If you reply to one of my posts here, I try to reply right back to you. It's a great place to connect with me in between these live streams. Now, here's a final thing. Don't sign off, because I have something new. I've always said this is the only way to contact me in between these live streams. There are now 2 ways. Starting today, I now have a LinkedIn profile, and I literally made my first post there. So if you go there, you're going to see one post, but I'm going to be on there regularly as well. So if you don't have an account with X, but you have an account with LinkedIn, we can link up there. So let me show you that. There we are. So there's my LinkedIn profile. It's going to look pretty familiar. It's going to have the same Scottish castle in the background. Here's me sitting on a bench, sort of trying to look as professional as I can. And I'm going to be posting here as well. So make sure you give me a follow there, like these other 12 people at 17,000 followers on X. I suppose if you want to be not in such a crowd, maybe follow me here on LinkedIn. All right. But everybody, thanks for giving me your time today. I'm going to let you go enjoy the rest of our educational offerings through the rest of the day. I will look for you in a future webcast. I'll also look for you on X. I'll also look for you on LinkedIn. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.